Hello, everyone, and welcome to another episode of Coinscapture Media. So, we are bringing you conversation with leaders, innovators, investors, regulators, and entrepreneurs shaping the future of Web3, blockchain, and digital assets and emerging technologies. So, I'm your host, Jetso Anlin, and today we are joined by a distinguished legal expert who has been actively advising startups, investors, and businesses navigating the evolving world of digital assets and regulatory framework. So, joining with us today is Krishneil Gosai, founder and managing partner of Gosai Law, a UAE-based law firm advising clients across corporate structuring, venture capital, global digital assets, tokenization, regulatory compliances, and emerging technologies as well. So, as the Web3 industry continues to mature, founders are increasingly faced with critical questions around licensing, regulations, fundraising, and tokenization, and choosing the right jurisdiction to build and scale their businesses as well. And few people are better positioned to discuss these topics than someone working directly with entrepreneurs or investor at the intersection of law and innovation. In today's conversation, we will explore around why UAE has become a global hub for Web3 businesses, the difference between VARA, ADGM, DIFC, and RAK DAO, and tokenization and real-world assets, fundraising, and legal readiness for startups, and how everything practical advice for founders building today in a rapidly changing landscape can happen. So we will be discussing all these things, whether you're a founder, investor, builder, or simply interested in understanding where the future of digital asset is heading. This episode is packed with valuable insight and actionable takeaways. So Krish, welcome to Coinscapture Media. It's been a pleasure to have you with us today.
Awesome. Thank you for having me. Extremely excited to be here. Appreciate your time as well, and definitely keen to see where the conversation goes.
Perfect. So we'll start with your journey itself. Like, what inspired you, your transition into this legal and regulatory side of emerging technologies and digital assets, especially?
Yeah, it's always an interesting one. I think with lawyers, sometimes you just fall into a certain practice area, and that's sort of been my journey over the last 10 years in the space. So, I mean, I was admitted as a lawyer in 2016. I was working for a firm in Australia called Clark, and I was asked to write some articles about how blockchain could revolutionize different industries. So this was back in 2016, looking into how blockchain could be used for various industries like health or transport, and then really getting consumed by saying this is great, like this has the potential to revolutionize different sectors. So I started there and then made my journey through various different practice areas like litigation and corporate commercial. I then found myself in financial services, working for a financial services company. We managed $1 billion worth of funds on behalf of schemes, and had a payments arm that did about $2 billion a year in payments, and a $50 million loan book as well. So I was 2IC general counsel there, managing legal risk and compliance, and left that and started up my own fintech. So I partnered with a couple of guys from the UK, and we were building a digital bank at the intersect between traditional finance and crypto. So really looking at how crypto could be brought into the traditional financial services system. And that really helped me, gain first-hand experience from, technology ground up, but also the intersect between, I guess this very new digital economy versus the traditional payment system. So we ended up selling that to 2 investment firms, and then I joined another firm as head of crypto law, and had a sister company, which was Australia's largest OTC desk, and I was chief compliance officer and legal counsel for them there for a little bit, and start up my own practice afterwards. So, I think the journey for me has been quite interesting. It's a little bit different in the sense that I've had opportunities to experience the business side of crypto and Web3, and in conjunction with the legal side too. So I really get what founders are going through, but also understand some of their goals when it comes to legals.
So you said you started your journey back in 2016 itself, right? So
Yeah.
how exactly was your experiences from that particular point of time till now on advising startups and investors and enterprises, and how that shaped your perspective on Web3?
It's changed a lot. I think in 2016, the space was still one where people were trying to figure out, like, is this legitimate or is it not? I think it's very early on. I mean, I would think that most of the rush came in 2018 to 2020, right, around that period of time. So this was before that. So it seemed in 2016, it was just a new technology that came out, but nobody really knew if this was legitimate or not, or if it would take off or not. And then over time, we saw, the I guess the Ethereum rush, the Bitcoin rushes as well, the peaks and then the troughs when it's dropped quite significantly. We've seen, the meme coin run, we've seen the NFT runs, and now what we're seeing is sort of like the institutionalizing of crypto and Web3. So it sort of evolved quite significantly from tokens and communities and projects and art to now really regulated, where we're looking at stable coins or financial institutions or payment rails. That's how the space has matured. It's definitely changed a lot since 2016. But I think now we're really entering into a time where crypto is really synonymous with financial services.
Correct. I mean, you began your complete journey onto the digital asset since a very long time, and your law firm is also based in UAE itself. But what actually makes UAE one of the most attractive jurisdictions for these Web3 businesses today? And why not other countries? Like, what makes UAE specifically for this one?
Yeah, it's a great question. And I think for us, like our law firm is not just UAE. We have a UAE presence, but I originally started the law firm in Australia, and then we have offices in the US, the UK, obviously in the Middle East. We have practitioners based in Europe as well. So really for us, what we realized was that as soon as you launch a crypto project, you're global from day one, right? Like anyone globally can buy your tokens. So, and I think with that in mind, the law hasn't really caught up, right? Traditionally, law firms are very much based in each individual jurisdiction. It's really difficult for a founder to go to one firm and expect to get global advice. So that's what we've tried to build here at Gosai Law. It's essentially a one-stop shop. Founders can come to us and go, hey, I'm launching this project. I need advice from the US, UK, Middle East, APAC, and we can handle it under one roof. Which sort of flows to why we open up a UAE office and UAE as a crypto hub. I think historically with crypto, what you find is that we went through a period where there was a lot of regulatory uncertainty. So, the US, UK, I guess Western countries in general, there was this period where nobody knew whether it fell within traditional financial services regulations or whether it was a product outside. And it meant that founders and projects couldn't really build with any certainty. And I think the UAE has really come to the forefront here and provided clear regulatory guidance for issuing of tokens or projects or decentralized protocols, even with tokenization now. The standards that are put forward in the UAE are quite clear, which promote growth and investment. Whereas I think in other jurisdictions, it seems like it's more death by regulations, right? They want to try and control the different products, and what happens then, it stifles innovation, whereas it seems like the UAE has been a jurisdiction that just promotes and tries to foster that innovation. And I think that's what's making it a really attractive jurisdiction for a lot of founders and projects. And we see it now, like, when I'm here in Australia, we just had a proposal by the government to change capital gains tax and tax laws. And what it really resulted in was a lot of founders coming to me and a lot of business people coming going, we're looking to move overseas. Like we just don't get the business environment here in Australia. We're looking to relocate to Dubai. And why? It's because Dubai is an ecosystem that promotes and fosters innovation. Whereas I think that's what the difficulty is with some of these other traditional and forward-leading Western jurisdictions.
All right. So when these types of startups or people who are moving from Australia or any other country to Dubai, so they're always confused about what's VARA, ADGM, DIFC, and RAK DAO. So how do you differ them from each other, and what's the difference exactly around these things, and how can it be simplified to the founders who are entering into it very new?
Yeah. I usually take a first principles approach here, right? I think what's really important is to understand what the project is or what the founders are trying to achieve and what they're trying to build. And usually that starts with a ground up approach. And you sort of look at, what exactly is their product? What's the target market? What jurisdictions are they operating in? And what flows from that is you actually understand like what their goals are. So, what type of investments are they looking for? Are they looking to be more, traditional in sense of, traditional financial services and that market, or is this something that really pushes the boundary a little bit, and it's something that they're happy to, be more in the crypto forefront of it? We also look at, what their long-term plans are. Is there one where they're looking for investment? Are they looking to be acquired? Are they looking for a listing opportunity? Where would the investors come from? So once we ask all of those questions, we really understand which path they can sort of go down as well. So, ADGM is obviously Abu Dhabi, and it's more a traditional market, right? So it's something that a lot of traditional funds or exchanges would go to get regulated in, right? DIFC is a bit more innovative in Dubai. You have RAK as well, or Ras Al Khaimah, and that's, out of Dubai, it's other states, but and it's really pushing like a new innovative, innovation zone, but it is still quite young compared to some of the other jurisdictions there. And then you have other things like, DMCC. So it's like the crypto center there, right? What I would ordinarily say is like each one provides a home, right? So like you can set up your free zone company there, you can start to trade, there's various licenses in between, but there is also the requirement to be licensed if you are providing a financial service or financial product, not just in the UAE, but also potentially globally as well. So that's why we really have to understand the project from the ground up, because once you launch a token, you might be compliant in the UAE, but if you have clients and customers in Europe or the US or UK or Australia or Singapore, Hong Kong, etc., you also need to pay attention to the regulatory nature of those jurisdictions and whether you need to be licensed in those jurisdictions too. So this is one of the misconceptions I find, is that they think that once they're regulated in one spot, they're free to operate and projects are free to operate globally, but it's really not the case.
Yeah, you mentioned about the factors which these founders should consider while choosing the right jurisdiction as well, right? So what are the common misconceptions these entrepreneurs have while establishing a Web3 company in UAE?
It's a great question. I think the misconceptions really come to regulatory compliance, right? For a founder, it's quite rare that they have a full understanding of the global landscape applicable to crypto. So often what they find is, or what I find is, they'll come to the UAE or any jurisdiction and go, okay, I just need to understand the laws that apply here in this jurisdiction. And the danger with that is, again, usually for financial services and laws, it's really where the end user or the customer is being based. And it comes down to customer protection. So if you are advertising or providing a financial service to a customer in a particular place, you will likely have to be compliant with the rules and the laws in that particular place that the customer is based. So I think that this comes out the biggest misconception. It's they set up a company in the UAE and they expect that they're compliant globally, when that's not really the case. I think the other misconception here really comes with tax. I think one of the other, it's a big one and I see this on social media all the time. You have people promoting that I just set up a free zone company and you pay zero tax, Dubai is zero tax. But what they don't understand is that sometimes there are other laws in the country of origin that really capture foreign companies and setting up foreign companies to avoid tax. So that could be, in Australia and other jurisdictions, you have something called controlled foreign company rules. So if you are an Australian tax resident, but you set up an entity overseas, say in Dubai or Caymans or BVI, Panama, and you have control, so the central management and control is based in Australia, you will still be taxed like an Australian business. It doesn't mean that you go scot-free with paying no tax at all. Also, if you move over to Dubai as well, there are also, tax events that might occur where you have to pay tax, or you might still be captured as a tax resident of your country of origin. So that's where I think, again, there's some misconceptions, which is, you move to Dubai, you start a company, there's no laws that apply. The space is highly complex, and there is always going to be various legislation or regulations that you have to comply with, whether it's corporate, commercial, financial services, tax, consumer protection. It's a very complex field.
Yeah, rightly said. I think that's one thing where most of the founders miss as well. They feel that it's always zero tax around those things, and they try to move the entire operations over there, but they fail to understand these things. So let's say if I start a business right now on Web3, and if I have to move to Dubai, so what is the first legal consideration each and every founder like me or they should address before launching a Web3 project?
Yeah. So, I mean, if we're going to start here, we're going to start at where are you currently based, for example, right? Like, if you're based in, say, India or, the US or Australia or Singapore, Hong Kong or UK, usually you're moving to Dubai, right? So the first place to really start is your country of origin and essentially cleaning up house. What you want to do is create a clean exit from your country of origin, right? Because you don't want to be, again, double taxed or having your new operations that you set up in Dubai really captured within your country of origin's tax regulations or corporate considerations too. So I would always start there, right? We start from the very start, right? Where are you based? Why do you want to go to Dubai? What exactly do you want your company structure to look like? Who's involved? Where are the founders based? Where are your team going to be based? Where's your customer target market going to be based as well? So really, we need to identify from the ground up which countries and which jurisdictions you have a nexus to. So where are you touching in any regard, right? Then we start to work backwards from there. So we go, okay, founders are based in a certain jurisdiction. We want to move to Dubai. Okay, let's clean up shop at home. Let's completely cut ties in your home jurisdiction. Let's set up an entity in Dubai. Right? Then it comes back to what I was saying earlier about what is the project that you're running, what are the touch points, regulatory licensing, investments, etc. Then we pick a free zone, right? And we might go, okay, for something of your nature, really we should be incorporating in DMCC, right? Or we should look at DIFC or ADGM, right? Do we need any regulations? Do we need any licenses, right? So like, what type of project are you running? Are you running a stable coin, or are you running a decentralized exchange or investment fund, tokenized product, right? So we need to understand this from the ground up, and then we do an analysis to work out what is the best path for you in that. So really, there's a lot of preparation in this. I think the biggest mistake that I see founders make is like they rush into something and they see something online or they read something and they go, I'm just going to set up my company here because it's quick, it's cheap, it's easy. But what they don't realize is that if you don't do it right the first time, in order to reverse those decisions, if you've done something wrong or do a restructure, it's going to be extremely costly and extremely time consuming as well. So my view is like, we might as well set it up right from the start, just so they have a proper process through.
So what do you think, at what particular stage should a startup engage with the legal counsel?
Yeah, it's a really interesting one, right? Because I'm always of the believer that legal can be looked at two ways, right? You can use legal as a weapon and you can really weaponize it and really fast track your business. If you don't do that, legal sort of becomes reactive then, right? It only comes when there's problems, and then again, the cost to undo becomes quite expensive. So in my view, right, it's really important that the founders don't lose sight of the most important thing is getting your product into market and getting customers. Right? You can have the best legal structures. You can spend tens of thousands or hundreds of thousands on legal structures and have the most complicated and best structures out there. But if you don't have any customers at the end of the day, you don't have a business. So it's really important that, in my mind, the way I approach things is that we should be an enabler for your business, right? Engage from the start, which is fine, but at least let's set out a roadmap of what you need to do from the legal side, and we can really understand what needs to be done now, what needs to be, what can be pushed out for 6 months' time, what can be pushed out for a year's time. At least we have a plan of attack. And then we usually set thresholds to say, look, as soon as the business grows past this level, then it's great. Let's engage the next stage. Let's go to stage 2, right? So I would say that it's important to engage with legal early on, especially if you've got a highly regulated project or product. And what you want to do is essentially understand what regulations might be at play here and that you're not falling foul of those regulations in the first instance. But once you really understand that, then I would usually go, look, let's get the bare minimum put together. Let's get, your corporate structure, at least a company set up. Let's have, IP assignment agreements to ensure that IP sticks with the companies. You have employment agreements and contract agreements, so the people that you engage are fully engaged in the right manner as well. Then there might be some other, services agreements that you might do from time to time. But apart from that, really focus on building the project, right? And building the product. Once you get it to a stage where the product is essentially ready to go to market, that's when we, come back, engage legals, have a look again, get your terms and conditions, privacy policies. Let's start looking at if there's any, regulatory requirements for that. You might do your sandbox or your test of it, get some initial customers. Then really once you do your full push, that's when we can start working more closely together. But it's a fine line between not spending too much on legals in the early stage and also having the bandwidth to be able to push your product and test and acquire customers.
All right. But what do you think, which particular structure will be good for these types of Web3 companies? So do you have any recommendation, like what you done for the past few clients or customer cases? So what is the best structure that suits for these types of Web3 companies?
It's really a case-by-case basis. And I think historically and generally, there's quite a few structures that are commonly run for Web3 projects, right? So, in the UAE, you would have free zone companies set up, right? And companies that really incorporate in the UAE and they're really operating from the UAE. For global businesses, the common structures are usually, a Cayman or BVI entity. You might see a Panama entity as part of that too. Historically, you would see, Swiss foundation. But most Web3 projects, I would say, really look at, a Cayman BVI structure in some capacity, whether it's a foundation company in the Caymans with a BVI subsidiary or BVI opco. So, and the reason why I say it's a case-by-case basis is because a lot of those structures really run the project themselves, but there'll be a devco or development company also that might be required. And this development company sometimes is based where the founders are located too. So it might be, onshore US or UK or, European company. And there'll be some intercompany arrangements there. But I would say there's no one size fits all with crypto. Every project likely needs their own structure. And yes, there's a lot of structures that have been run and you can leverage those structures, but you really need to understand the nuances between each projects so to have the right advice as well.
Okay, so right now in UAE or any other, I think even in UK, I've seen a lot of projects which are coming up related to tokenization. I mean, a lot of institutes are getting into it. So how do you think, how do you look at the current market of tokenization? So what are your thoughts on those lines?
I think tokenization definitely has its place, but really what tokenization aims to do, and I think what the real utilization use case is really the tokenization of financial instruments, right? And why this is the big problem that everyone is trying to solve is really because of liquidity. So historically, when you look at traditional financial markets, trading would only occur during the open times, right? And what crypto and Web3 provides and blockchain essentially provides is non-stop 24/7 trading, right? And the ability to trade and transact and execute at any point of time. So really, it also provides a basis for strong record keeping and verification as well, which the primary use case is sort of aligned to normal traditional markets, right? So whether that's gold, silver, commodities, you have real estate being tokenized, you have bonds. We're seeing various assets, as in equities, right, for different companies. So you can see like, tokenized SpaceX stocks, or tokenized Tesla stock as well. So like really tokenization is just providing liquidity into various markets. So I think the space is still quite early, right? We haven't really reached an inflection point where most financial instruments are moving on chain. We see there's a shift and there's a real testing period for that. But perhaps after, mid next year, once the Clarity Act, if that goes through, provides a bit more of a foundation, then we really start to see a shift onto tokenizing financial instruments, which then you're moving, trillions of dollars on chain, which again, it's a market that then allows for better, I guess, execution, liquidity, participation across the board.
All right, but out of all these asset class which you mentioned out, so which one is attracting the greatest interest for tokenization, and what according to you is the best one out of all the asset class?
It's hard to say if there's a best one, right? Because I think fundamentally tokenization just provides, a use case and a way and a means to be able to transact. So for each individual trader or participant in the market, there's a particular asset class that they usually like to trade, right? What we've seen in some of the works that we've done is really around like precious metals, right? Tokenized gold or silver. That's something that has been quite successful in recent times. Why? Because if you look at Paxos, for example, right, like you have redemption rights as part of the T's and C's there. Gold is an asset that is volatile in a certain respect, but can also be traded and redeemed and used, right? Whereas other equities, for example, like stocks and shares and interest in funds and companies, there is still a lot of legal clarity to be provided there, because how does it interact with traditional corporate structures and shareholders agreements, or the constitution, KYC, record keeping? Those are the things that still need to be ironed out. So I would say that, again, tokenization, we're still probably in the early stages, right? Whilst a lot of people are looking at tokenization and looking at building tokenized businesses, there is still a lot of like legal uncertainty and regulatory uncertainty for it, which I hope and I think it will get clearer over time, right? Like we saw recently, Cayman's just released clarity around tokenized funds. So you can tokenize fund interest as well. But you also have to, I guess, understand that just because we've tokenized something, there still needs to be consideration as to how that token is to operate in the market. So is this an open loop system where, it's an ERC token which can be transferred to any pretty much ERC20 wallet, right? Or is this a closed loop system where someone has to onboard in order to, conduct KYC, and then once they've conducted KYC, then only you can transfer the token to them. So there's a mismatch between traditional laws and the tokenized technology, which I think over the next probably 18 months will become a lot clearer.
So you talked about regulatory shifts and everything, right? So what do you think, how are the regulatory environment evolved over the last few years, and are these regulators becoming more supportive of innovations, or they're not?
I guess it depends on which jurisdiction that you look at, right? Historically, I think we've come from a place of no or unclear regulations into now various jurisdictions are trying to regulate. But when you really look at what they're trying to regulate, it's either going to be the token side or it's going to be the platform side as well. And the platform side is really the intersect between the traditional financial services system and the digital economy, or it's going to be the actual tokens itself, right? So like, the EU with MiCA really look at the tokens, right? What type of tokens they are. Whereas, in Australia, what they're looking to regulate is the platform. So if you are providing, an exchange service or a wallet, you may be regulated there. So, the UAE has taken a very different approach. I think, you have multifaceted regulations in that respect, but I guess the supportiveness of various regulators really come back to which jurisdiction and what is their ethos, right? I think a lot of jurisdictions try to control and regulate and protect consumers, right? Which also has the effect of stifling innovation, because what it ends up doing is creating large regulatory burdens for companies to meet, whether it's licensing costs or insurance or legals. And companies can't afford, a lot of companies just can't afford to meet that regulatory burden. Whereas, in other jurisdictions like the UAE, they really promote and foster innovation. So, the regulatory licensing is still it's expensive to a certain extent, right? Like, it's still a regulatory license that you need to obtain. But what it does, it promotes and fosters innovation, right? It allows people to run their businesses and grow and expand and get government support or jurisdictional support with it. So I think, really to answer your question, it really is a case by case on which regulator. I think there's a lot that really look to clamp down on crypto and really go, this is a threat towards financial services. And there's others which go, okay, this is a great innovative new tool. We need to foster innovation. We need to try and bring this in. So it opens up the market for other people to participate.
But, I've seen a lot of businesses failing because of these types of compliances, challenges and other things. But even with regards to, let's say, UAE and let's take other jurisdictions as well across US and other sides. Like Europe has, I think, MiCA as well, right? These controls everything. And even let's say in other regions like US where the regulations are still maturing and other things. So what's the actual compliances challenges that these Web3 businesses are still facing today? And do we have any kind of brighter side in the near future where these can be solved out or eliminated?
It's a great question. I think the major compliances are when you look at a regulatory licensing application and what the requirements are, we have to understand that it's a license in terms of the traditional financial services regulator, right? So a lot of these applications are going to regulators that are empowered to protect consumers and to ensure that these products are, I guess, being distributed in a manner that is okay for the masses, right? So if we take a step back from that, we look at, for most of these projects, the requirements are really centered around, do you have the capabilities and the experience to issue this product in a manner that protects consumers, right? So, I think for most Western jurisdiction, I'll use say Australia, UK, US here. You would likely need to have a person on your team with some sort of organizational competence or experience that can act as a responsible person and show the regulator that you understand the regulatory landscape that applies to this business and you have experience discharging this compliance duty as well. And that is the biggest hurdle that I see with a lot of crypto businesses, especially in Australia, right? There's new regulations that really promotes financial services licensing for Australian crypto project. And if they want to get a license from the regulator, they need to show organizational competence. They need to show someone that has been involved in the financial service system with either 3 years experience out of the last 5 years or 5 years experience out of the last 8 years issuing financial products. They likely need to have a degree, a relevant degree as well, in either finance or business or economics. They need to have training in compliance and AML CTF. So it's a very high burden to meet. Then when you look at most crypto projects, it's like, a bunch of friends or enthusiasts or people in this industry that really detest or that they want to challenge the financial services industry, right? So if that's the case, they likely won't have, the traditional financial services person that's been in banks or financial services companies for the last 10, 15 years. So that becomes a gap. And that gap is where I think a lot of businesses struggle with. A lot of crypto businesses struggle because when they do apply for licenses, there's no way for them to demonstrate that they have the experience. They might have I guess, experience in software development or coding or trading or something, but they don't have experience in actually issuing and running a financial services business. And that's where the mismatch occurs.
And you've been seeing this market since 2016. And with regards to investors as well, you've seen a lot of funding cycles which have been through it. And I still remember, like, at those particular point of time, most of the project used to get these types of fundings without any kind of legal counsel or without any kind of much harder work. But right now, looking at the after such cycles, so we've seen even investors are much more careful on those things, on how to do it and the legal proceeding with it and each and everything. So how has these fundraising changed for Web3 startups since the previous market cycle, which you have seen from the past 2016?
Yeah. Fundraising has changed a lot, like a lot. And I think historically, a lot of projects would raise immense amount of capital just on an idea, right? And usually they were raising via SAFs or token purchase agreements, and they're just selling their token, right? Which meant that usually you still have equity holdings in the company that's running the project, and that equity was held by the founders of the company, and they'll just sell tokens and invest via that way. We've definitely seen a massive shift, right? Because I think what ordinarily happened was a lot of VCs got burnt with the tokens, right? Like projects would issue their tokens. A lot of the insiders would sell on day one or immediately after the token issuance and essentially tank the price, which meant that liquidity was drained out of that token, very hard to recover. And it was great for a lot of VCs and for a lot of investors, because what it meant was it was a liquid investment. With equity and with other interest in companies, it's usually held in there and it can't be exited until there's an exit event, whether it's an acquisition or IPO. You can't really capitalize on equity. But with tokens, I know a lot of VCs, and we act for a lot of VCs too. It just meant that a new ICO would occur every few weeks, a few months. You'd have your token there, you'd be able to sell, liquidate, have your capital, reinvest, and continue on, right? That was the typical fundraising structure a few years ago. What we're seeing now is that I think VCs are becoming a lot more astute. The market has definitely changed, right? So what we're seeing is that a lot of them want a dual structure of equity and tokens as well. It's moved from just purely tokens. I think that what they've realized is that the equity holding company derives its value once a token has done its initial pump and drop. So really they want to have, I guess, a bite of both cherries here, right? The equity in the company just to ensure long-term interest, and also tokens if they can have a liquid portion as well. I think the fundraising space is becoming a lot more difficult too. We're still seeing a lot of funds raising capital, but really the narrative has shifted from Web3 into like AI, right? Or traditional finance or regulated institutional crypto, right? I think the wild west of crypto, as I like to call it, the pump and dumps, the meme coins, the communities, that's really died down over the last few years. I think mainly after FTX, we've seen a decline of that side of the industry. And I think what FTX has really taught us, and there's others like Celsius and BlockFi as well, there's quite a few exchanges that really went under. So the need for a more regulated institutional approach towards crypto is what most have been screaming out for, because a lot of investors lost money. So from a government and regulators point of view, it's how do we protect this? It's how do we then make it more institutionalized, more regulated, which means that there's a higher bar for VCs and investors to come in, because they know that in order for this project to succeed, they essentially need to be licensed, or they need to meet these new standards that are coming up globally.
Correct. Because as a founder as well, let's say if we are going to raise any kind of funds inside with these investors, so what are these documents which we as a founder go and be prepared of before approaching these types of investors? And if we approach these investors, what are the common red flags these investors would identify during due diligence? Because right now we are on a stage where investors are constantly, monitoring it or doing due diligence of these types of documents around it.
Yeah.
So what should a founder take care of, and what are legal documents he needs to prepare in order to secure his funding round or securing a seat with this investor?
Yeah, I think it also depends with that on what stage the company is at too. So at what stage are they raising? Is this a pre-seed idea? Is it seed, Series A, Series B, etc.? And the documents that would be required at each stage is going to differ, right? At a pre-seed stage, it's very much ideation, right? It's MVP. It's sometimes they won't even have their legal structures in place. So it's very much like a pitch deck, and then how this investment will occur. Is it by a safe agreement, so like a simple agreement for future equity? Is it a safe and a token warrant? Is it a SAFT? Is it just equity subscription as well? So we really need to understand what the mechanism for investment is. As you sort of move forward, there's larger considerations for every project that would be a red flag for due diligence. The biggest one is really around IP, right? So if you're running a certain project, you need to ensure that all of the intellectual property is owned by the entity that's raising capital. Why? Because the investor will invest into this entity. They want to make sure that that entity owns everything. And we see a lot of times that either the founders engaged a contractor but there's no agreement for it, or the founders themselves have built something but they haven't assigned the rights and the technology or the code to the company or the IP. So I think it's always around IP first and foremost, because that really sets the foundation for what exactly is the investor purchasing. Apart from that, you really look at the team situation too. So like the engagement of the founders, the contractors, whether or not that they have taken the time to really sign agreements with people and really clarify what the roles and rights and responsibilities are. I think for founders, if there's more than one, you look at a founder agreement between, right? So like, what is the split of the roles and responsibilities? What happens if there's a dispute? What happens if one founder leaves? And the reason why that's important is because the VC doesn't want to be investing in and knowing that at any point in time, a founder can leave and take, assets from the company or could cause detriment to the company. It might come with a shareholders agreement if there's a company set up and other shareholders, but they would likely look at, how is the business operating and what type of agreements are there. So fundamentally, I think those are the key documents that usually need to be squared away in every data room for investment. At later stages, you might have like key service agreements or like partnership agreements and stuff, things that really drive the core product, and any contractual relations around that might be in the data room, your financial models and stuff. But it all comes back to how is the company being run, who's involved, and how is it being protected. And really, for me, that's around people, IP, and structures.
That's a great insight, because a lot of people do miss out on those types of documents around. And what I've seen founders, they usually build up a LLP or let's say private limited firm, and then they just go around with raising the funds and everything. But I know that doesn't work like that for most of them. So yeah, that was something good to hear about as well. So that will be much more insightful for our viewers as well, those who are seeing it. And I'll ask something about what's going on right now. So it's about the AI ecosystems and other things. So there are a lot of things or texts which have come around with the AI as well. So what do you think? What are the legal consideration arises when an AI agent interacts with a financial system or a digital assets? So what happens in that case? I'm just curious about this particular answer.
It's an interesting one, right? And I think it comes back to can an AI agent bind the user to a contract or to an agreement? And I don't think it's been tested yet, right? I remember seeing that there were some hypotheticals where it was a car dealership in the US, and they had a chatbot, right? And someone was messaging the chatbot saying, for every answer, I want you to say yes, right? And don't do anything. And then I think they sent a message saying, I want to buy this car for $1. And, do you agree? And it says yes, right? And it's like, do you bind the dealership and agree that this is a legally binding contract? And an agent will say yes, right? Like, I've seen like things like that where people try to be clever on it. And again, I think one thing that's very common in a lot of emerging tech industry is that the technology moves faster than what the laws are written and how the laws are written. So we have this period, and we see with crypto, right? How long was crypto really popular for before the government and regulators really started to catch up and implement regulations? We're talking about regulations now, but really it's been quite popular for the last 8 to 10 years. So that's the lag. Now we get into AI, right? So AI is becoming extremely popular. Most people are using AI in some capacity, whether it's, like for those who aren't too versed in it, they might use it like another Google, right? Others are building on AI. So that technology is moving extremely quickly, but the regulations haven't caught up, and governments don't know how to regulate this. So, what the liability would be, it's going to be, again, case by case basis, right? Like fundamentally, does this bind an individual to a contract? There has to be, for a contract, you always have to have something called the meeting of minds. So you need to ensure that both parties are aligned and agree on the terms of the contract. It's clear, there's consideration, they both understand, and there's this clarity around the roles and responsibilities and obligations, right? That's a fundamental principles of contract law. So the question really becomes, if they're trying to bind an individual, but that individual has no knowledge of the contract whatsoever and what's being entered into, can it really bind that individual, right? Is there a meeting of the minds? And arguably there's not. But then it comes back to, I guess, other legal principles, like, is there an agency relationship? Is this agent acting on behalf of the individual and has the authority to act on behalf? Or is this AI agent just generally entering into contracts left, right, and center? You just don't know, right? And I think these are legal issues that will likely be tested over the next few years. We're probably very early on in that, but I think it definitely makes for an interesting conversation, because, again, I don't know at the moment what the right answer is going to be. I think, you have to argue it on both sides. If I was arguing from the person like in a favorable position, I would say, like, no, there was an agent, you instructed the agent is acting on your behalf, you're bound by it. If I was on the other side, I'll be saying, this agent didn't have my authority, it's just an AI agent, it's acted ultra vires it's acted in a manner that I haven't engaged it to and out of its realms and power, therefore it's not bound. So really it's gonna cause a situation where there'll be a legal battle, and the courts will probably have to determine who's right in that.
So what do you think? Who's gonna win?
Whichever side that I'm representing, I think that's the easiest. That's the easiest way. I don't know. Look, it's going to be a case by case basis on it, right? It's case by case on it.
That's a good one, because so how do you so you have a law firm as well. So how do you see these AI things going around as well? Because apart from the legal bindings and other things, do you think AI can be utilized as a companion? Or do you think that these AIs are providing much more legal services for the end users and making them more aware or something like that? So what do you think? So it's gonna be a companion, or it's gonna be a solution for it?
In terms of legal, or just generally?
In terms of legal, yeah. In terms of legal.
In terms of legal, I honestly believe that AI is going to disrupt the legal industry. Like, I think there's no two ways about it. I think if you're a modern law firm and you really want to pride yourself on providing the best service to clients, you should be utilizing AI in some capacity. Initially, I think, AI still has a lot of room to grow, right? Like the models are improving, the capabilities are great, but you just can't trust it 100%. There's still hallucination. It doesn't have the full context. It doesn't understand that there may be various factors that play into a particular, advice or decision. So I think the firm generally, we've built our own AI models internally to make us more efficient, but there's always this human in the loop requirement. So always have our lawyers checking over the work product, amending it, making sure that it is accurate. So really what that provides is it is a companion to a certain extent, right? We're seeing now more and more clients use AI to draft contracts. My honest belief is that the value of legal documents in the next few years will go out the door, because legal documents and corporate commercial transactions are very much precedent based. So it's been done before, right? It's just an agreement that's changed up, but the principles are fundamentally the same. And there's so many precedents out there on the web that I'm sure the AI models in the next few years, considering what the growth has been from a few years ago to now, and it's been astronomical. From now to the next 18, 24 months, I'm sure like Fable and Mythos and other models out there, it's going to be able to draft pretty good documents on it. So then the value of legal really becomes having an advisor on your side to help you through things, right? Value of legal documents, probably not that high. The value of strategic business advice and positioning and making sure you're on the right path, I think that is what's going to be extremely valuable. And that will really differentiate lawyers, right? I think those who are commercially minded and that can grow will rise to the top, right? Because people want to engage with those lawyers and help them through. And, AI will be a tool that helps, I guess, weaponize those businesses and those individuals to produce more in a quicker amount of time. For those that are purely reliant upon legal drafting and documents, I think AI will likely replace a lot of their roles in businesses. It's definitely going to be an interesting time over the next few years. I think the CEO of Anthropic put out a statement where he thinks more than half of the graduates' professional jobs will go over the next few years. And I see that, like, we have a lot of connections like accountants, lawyers, and professional services firms that we interact with. And a lot of them aren't hiring junior lawyers or junior accountants. They're building tech and building systems which are repeatable and workflows. And again, it's a scalable solution, whereas I think the younger generation will likely find it difficult to enter into the market unless they are well equipped in technology and able to push forward and grow and utilize and perform at a higher standard.
Very well said. I think that's truly understandable with respect to what is going around in Web3. And the advising part, I agree on that. So what do you think if you were advising a Web3 founder from day one? So what roadmap would you recommend for them?
The roadmap is quite clear. Really everything starts with the founder's personal situation. And I think this is sometimes where a lot of lawyers and advisors go wrong. They like to jump straight into the product and the project, right? And what ends up happening is you actually miss the rationale behind starting the business, who the founders are, what their purpose is, what their drivers are, what their constraints might be too. So where they're based, or, whether it's, language or cultural, or, visas if they want to move countries or anything, right? Like there's really, it comes back to the founders first and foremost. So I always start there, right? Like, what is it that they're trying to build? What is it that they're trying to achieve? Where do they want to go? What does now look like? What does 6 months, 12 months, 5 years look like there? Then once we establish that, we also understand who's involved. Like, what's it going to take for you to build this? Who do you need to get involved in this? Do you need a co-founder? Do you need employees? Great. So now we understand the people side, right? So really, for a project to be successful, you need people to build it, right? Or you need someone to drive this narrative. So we start there. Then really from there, we look forward to the company itself. So we have this product. How should we issue this product? Which entities do we need to set up? Where do they need to be set up? Jurisdictional analysis, right? Start with your corporate structure. Also from a founder's point of view, biggest thing here is like you want to protect the founders' assets too, right? Which is also why we start with founders. A lot of the times founders will start and then they register the shares or the tokens in their own name, which is like, if you have an exit event, you might have a taxable event as well with that. If you get sued, all of these assets in your personal name, which is up for grabs. So, we look at, various structures or foundation structures or, trusts that can really protect their assets as well. So that's why I think starting from a personal point of view is always important. Then you obviously leverage, corporate structuring after that, where the company's going to be set up, who's involved, the contract side of things, then, whether it's fundraising first or bootstrapping, then licensing, product, market overview. So really it's start with the basics and then grow from there once the product matures and once you start to grow the business and actually have a business as well.
Perfect. I think that's something good. And legally structuring these are very important as well. So even I started back in 2016. So I just have one question for you. Like I'm sure that you will be answering something innovative on these lines. So looking ahead of 2030, okay. So let's say over a period of time, we have a lot of time, over 2030. What do you believe will be the most significant changes in the Web3 digital asset and tokenization field?
In 2030.
2030, yeah.
Which is also scary that it's only a few years away. Like it's not like it's so far-fetched, which I think would kind of lend itself to like what is happening now. Right? We're like, halfway through 2026. What are the key narratives over the next 6 months or so, which would take, a year or two to really establish and then move forward? So my view, I think what is clear is that stable coins and the intersect between traditional financial services and the digital economy, that is something that's gaining momentum at the moment. So really, in my view, that's probably going to be the big narrative, right? It's going to be around financial institutions moving on chain and financial instruments moving on chain as well. So I think what we'll find is that there's going to be a broadening of tokenization from just gold and silver and precious metals at the moment. Really, when you look at stable coins, it's like tokenization, right? They're tokenizing fiat currency. I think what we'll find is there's going to be tokenized debt, tokenized equities, tokenized fund interest, probably tokenized derivatives as well, trading instruments. A lot of the instruments that get traded on a day-to-day basis by traditional institutions will get tokenized. And I think that's what the biggest narrative will be over the next probably 3 years.
Okay, perfect. So based around the tokenization side itself. So what do you think the founders and investors are currently getting wrong about the future of the industry?
I don't know if they're getting anything wrong per se, right? I think it's that, look, industry and innovation always follows capital, or capital flocks to it, right? And what we're seeing now is that there's significant investment into AI businesses. Like AI is the hot narrative at the moment, and crypto and Web3 are sort of, been left behind to a certain extent, right? Like, so really for this to grow, I think there needs to be some sort of maturity around the crypto and Web3 and digital asset industries. And it's happening, right? Like you see a lot of the projects now that are doing well really come down to tokenization or regulated financial institutions, prediction markets. Why? Because it is serving a market that there is a large demand for. Meme coins and stuff, it's gone, right? I think we had that pump and now it's gone, right? Everyone sort of moved into like prediction markets and trading and speculative trading there, or like really now they're moving into AI products and agents and vibe coding and deploying apps and stuff. So the market has shifted. Capital will always follow. And I think for those markets that are well funded, those will be the leaders in the next period of time. So really the focus, I don't think that VCs or founders are getting it wrong. It's just that their attention now is focused on a different segment of the market than what it was historically.
Perfect. So are you ready for a rapid fire round?
Okay, let's do it. I'll give it my best shot.
Okay, so here goes the question. Best prediction for Web3 industry today?
Best prediction, is
Prediction for Web3 today?
Best jurisdiction for Web3. If they want to be regulated, I would say UAE. If they don't want to be regulated, I would probably say Panama or Cayman and BVI structure, the historic ones.
Perfect. Most misunderstood regulation?
I think it comes down to licensing. So like the need to be licensed and the need to hold a license, and the misunderstanding that flows from if you're regulated in one jurisdiction, you're fine globally. That's just not the case.
Most overhyped narrative?
Overhyped narrative. It's a good one. I think at this point in time, stablecoins. And the reason why I say stablecoins is because a lot of stablecoins are being provided by third parties, right? Like by companies that are essentially holding USD treasury and then issuing a token on top. I think it's overhyped because that market will change to regulated institutions and banks and central banks in the future.
Completely agreed. So what's the most underrated opportunity?
Probably prediction markets. I think prediction markets, when you look at various jurisdictions and how people like to, gamble and bet on different things, it allows them to create markets and different markets to essentially have that same fun on.
And one document every founder should have?
I think if they have multiple founders, a founders agreement or a shareholders agreement.
Okay. And one trend you're most excited about?
I'm most excited and scared in a certain respect about AI, in a sense that I think there's a lot of benefits and there's a lot of use for AI. And I mean, I use it on a day-to-day basis and I think it's incredible. But I also think that it will fundamentally disrupt financial services and jobs that will require governments and, various institutions to fundamentally rethink from the ground up what working life will look like for a lot of people.
Okay. And biggest legal mistake a startup make?
Biggest legal mistake a startup makes, I think not engaging legal early, trying to do it themselves and then relying upon AI like Claude or ChatGPT to give them the answers. Which also flows into not having the right structure set up from day one.
AI or blockchain, which creates more opportunities over the next decade?
It's a great question. I think AI will create opportunities and will also take away opportunities too. So, if you're looking at a net basis, probably more people will be blockchain adjacent in a certain respect. But I think AI has a bigger impact and fundamentally will provide more for people.
And the final one, tokenization. Is it a hype or inevitable future?
I think it is a little bit of both, but there is definitely merits to tokenization. And it really comes back to liquidity, the ease of engagement, transfers, executions, trades. So whilst there is hype, I think it is very well earned hype.
Perfect. Thank you, Krish. Thank you so much once again for joining us and sharing your expertise with our audience. Today's discussion offered a valuable insight on the legal side, the regulation, and the business of building into the Web3 industry as well. And from company structuring to fundraising, tokenization, and everything, the professional, each and every takeaway from this conversation was valuable. And one of the key themes from today's episode is that successful innovation requires more than great technology. It requires strong foundation, clear governance, regulatory awareness, and execution. So to everyone watching or listening, we hope this discussion has helped you better understand the opportunities and challenges, shaping the next generation of digital assets and decentralized technology. So if you are enjoying this episode, don't forget to subscribe to Coinscapture Media, share this conversation with your network, and follow us across our social media for more interviews with industry leaders and across the global blockchain and Web3 ecosystems. And you can find more information about Krish Gosai and Gosai Law in the link provided in the description below. And this is Jetso Anlin on behalf of Coinscapture Media signing off. Thank you for joining us, and we'll see you in the next episode. Thank you so much, Krish. Thank you so much for joining us.
Appreciate it. Thank you.